So, good morning to everyone tuning into Business Support Live this morning on Facebook. I'm James Chappell, Deputy News Editor at TTG, and thanks for joining us for like I said, the fourth edition of Business Support Live, which struggling to believe we've got to four already. It seems like only, hardly any time ago we were wondering what on earth was going on in this world at the moment. Just to recap, Business Support Live, this is our extension of our online business support forum at TTG, where we're trying to take and field as many of your questions as we can, and as we try and work through this difficult period for the travel sector. We don't know how long it's going to last, we don't know what the impacts are going to be, but we can at least try and look at some of the issues around business, legal, regulatory, accounting, insurance, government support, and the other issues that I know a lot of travel businesses have been trying to work out at the moment. The forum's on hand all the time to answer any questions you have, so you can head to ttgmedia.com, and we have experts on hand to try and answer any questions you might have. Today, we're going to be taking a closer look at one of the key issues at the moment in the travel sector over the past sort of month or so, and that has been financial protection. And you can be sure really any time where refunds are top of the consumer press agenda, then there is going to be some trouble for the travel sector. So there are plenty of questions obviously that are being asked every day of travel companies, and we are hoping to try and sort those out. So the aim of today's session is to have a look at the current financial protection landscape of travel, how the different models operate, and what that means for your business. So this morning, I'm pleased to be joined by Daniel Landen, Managing Director of Protected Trust Services, or PTS. Hi, Daniel.
Hi there.
We're also joined by Alan Bowen, who is Legal Advisor to the Association of Atoll Companies and a industry lawyer. Hi there, Alan.
Morning.
And we're also joined by Steve Endacott, industry consultant, who brings many years of travel industry experience to the discussion. So good morning to you as well, Steve.
Morning.
Just a quick reminder, you can put your questions to us at the moment via Zoom, and you can also do that via Facebook Live as well. So if you head over to the TTG Facebook page where this is being broadcast, you can pop your questions in the broadcast below there, and we will try to answer any of those we can as we go along. So without further ado, I'm going to ask Alan, please, if you're able to just give us a bit of an insight into the financial protection landscape in travel and some of the different schemes and models that are currently in operation.
Yes, certainly. Good morning, everybody. Well, I suppose the first thing to say is that not everything that we sell is financially protected. One of the big issues, and certainly an issue right now, is the fact that airlines don't provide any form of financial protection. Despite the fact that we've had a number of failures in the last 2 years, despite the fact that we've had a government report on the need for at least some financial protection for airlines, they're still escaping scot-free. And they are clearly the ones who would say at the moment are in big trouble. There's been at least 4 companies gone into administration in the last 10 days. There are others allegedly about to fail. Even Richard Branson, bizarrely again from a PR point of view, is telling everybody that he isn't going to survive as Virgin Atlantic if he doesn't get a huge loan from the government. So one of the issues we have in the travel industry is that some parts of it, flights, accommodation on its own, has no protection at all. And that potentially is going to become a real issue in the very near future. But fundamentally, for package holidays, the government allow 3 different schemes plus their own. Their own scheme obviously is the Atoll scheme, which you've got to use if you're selling a package holiday involving a flight element, and that operates on the basis of a £2.50 charge per passenger, and at least the start at bonding, and that bonding can come back if the CAA who run the scheme don't like the look of your finances, and that does worry me because I think people's finances in the next 12 months aren't going to look very healthy. The package travel regulations themselves allow 3 distinct types of protection. Bonding, a financial guarantee from a bank or insurance company that will pay out if there's a failure. The bond has to be held by an approved body, and there are 3 of those, the biggest of which obviously is ABTA. Insurance against failure. You take out a policy which protects your customers against your own failure. And I have to say that has worked very well for the last 30 years. One of my very first clients, when I set up in 1996, has used insurance for 24 years, being very satisfied with it. But It works, I think, for small companies, not for large companies. And we're certainly seeing now problems with business interruption insurance, with travel insurance, refusing to pay out. So I suspect that insurance may not be as popular going forward as it has been in the past. And the third option, according to the package travel regulations, is to operate a trust account. Fundamentally, all the customer money must go into a separate account, operated quite clearly independently of the company. The word independent wasn't in the original package travel regulations. So one of the directors could be the trustee of the account, which was a huge problem. The rules say the money shouldn't leave the trust account at all until the holiday is over. And that, of course, means if it operates that way, there is no cash flow at all. You can't pay your suppliers. And what we're seeing at the moment is that the suppliers aren't refunding any money. And of course, if you haven't paid it out, you've actually got the money to give back to the customers. For most trust businesses, they have a separate scheme where they can pay the money from the trust account out to the suppliers on the basis that they've taken insurance against supplier defaulting. The problem we have at the moment is that the suppliers haven't defaulted, so the insurance scheme doesn't come into effect. So I suspect a lot of people running trust accounts are in exactly the same position as the ABTA members, the atoll companies, and it's a real problem, and it's something which we need to look at very carefully.
Okay, thank you for that, Alan. And I'd like to bring you in quickly, Steve, just in terms of the challenges posed in terms of financial protection at the moment. I mean, what are the key issues facing businesses now? I mean, we obviously talked a bit about cash flow there as well. I mean, are there any other things that travel companies are really kind of dealing with right now that is an issue in terms of financial protection?
Okay, we've been running Rebound Consulting now for 3 weeks. Numerous calls. Most of them are just arm around the shoulder, reassuring people that the tough decisions they're making are the right ones. Because when you furlough your staff and you're at home, it's quite isolated being a senior manager. So having that conversation to say, yeah, you've got to put your business in hibernation now is the most crucial thing. Most people have done it. The big thing that keeps coming up, as Alan has raised, is refunds from airlines. Basically, the bigger you are when the crash comes, the more likely you are to fail quickly. And unfortunately, a lot of the airlines in that circumstance. And if you look at the Bank of America research that was done just before the corona crisis, it showed that forward monies held but not flown for a lot of airlines were greater than the cash they had in the bank. And for example, that included EasyJet, and most certainly including Norwegian. So what we're seeing is a lot of the airlines are holding on and not paying the money back. I also would go as far as I think some of the airlines are discriminating against agents. If a direct customer books with them, the customer can use their 1972 credit card act to do a recharge. An agent can't, as easily. And quite often what's happened is, say it's £1,200 average price of a holiday, comes into a trust fund. The trust fund logically should protect it, as Alan explained. They've paid it out to an airline. Logically, you have insurance to say if the airline fails. They haven't failed. So the airlines are the logjam. If that money doesn't come back into the trust fund, the agent cannot make the refund. The problem is it's damaging the agent's reputation. Yeah, and it's really making customers say, well, hang on, is my money safe? Why did I book that agent recharge? If they do a recharge, the agent's not only lost their commission, they've also lost £500 for the flight they don't have. Now that is the most likely thing for cash flow and put people out of business. Agents pay an atoll fund of £2.50 to CAA. It's outrageous that the CAA still haven't secured to allow the agents to use refund credit notes. Refund credit notes are not an ideal situation, but at least they're something. And that hasn't occurred. So the biggest issue to agents is how to remain afloat at a time when the customers are just about to do a load of recharges. And I'm also hearing ambulance chasers that chase up claims for EU claim for non-delivery of the flight are going to move into our sector and start claiming refunds on customers. It will accelerate the decline of cash rapidly and give the industry a massive issue.
Okay. Thank you for that, Steve. And Daniel, look, Alan picked up originally on that third part of the protection landscape, which is trust funds and trust accounts. PTS offers that particular service. Could you talk us through just some of the basics of how your business operates, and a bit about also the demand you've had since the start of this situation that we're in right now?
Okay. Hi everyone. PTS offers a trust account solution that's driven through a software system that allows us to do a reconciliation of all funds held on a daily basis. It also allows us to control all funds leaving trust on a daily basis. One of the things we did find 5-6 weeks ago when we were starting to look at COVID-19 was what suppliers are when they're actually travelling. So through our knowledge, we're able to guide our members and actually hold payments going out to suppliers for festivals, events, flights, accommodation in the April, May and March period to limit the amount of exposure they had with funds being held by suppliers. So although I do understand what Alan's saying regarding trust accounts still being in the same position as other models, a well-run trust account, which is administered by professionals within the travel industry that can guide businesses on the best way to pay suppliers in advance, does certainly mitigates an awful lot of that risk. And we've seen our sort of model stack up to that. We offer PTR compliance, merchant services, ATOL, software, everything that a travel company would need to work behind the scenes. And I think the key point to our trust model is that we actually reconcile all funds on a daily basis, and we check all funds leaving the trust account for all members, including invoicing, making sure there's enough money on each booking to pay that individual supplier. So the trust account is being used as it should be, which is when a consumer pays into trust, those funds that they pay in are only being used for their booking, which has benefited our members greatly in the last 5 to 6 weeks. So that's how we operate. It's certainly a more advanced trust model to anything else out there, where we started off at a time when technology enabled us to look ahead and think about how the industry was going to want to operate in a secure platform.
Daniel, out of interest, how have you found it working with some of the suppliers and the actual kind of supply chain within travel in terms of actually the funds moving around at the moment? Has that been an issue over the last sort of 6 to 8 weeks or so?
I think that the biggest challenge, when we first realised something was happening, we were quite aggressive on checking funds that were out of trust for bookings that we knew weren't going to go ahead to go back into trust. And we're fairly successful on that, or very successful on that. The challenge we've got at the moment is when are we going to start travelling again? Is it June? Is it July? Is it August? Is it September? And there are bookings in place where we are looking to being chased by suppliers for payments, but we are actually holding off on making payments in a lot of instances until at least we know the consumers are going to be able to travel. There are going to be flights, there are going to be countries open for tourists. So it may be where, rather than paying 30, 40, 50 days in advance, we're saying we probably aren't going to be paying any funds from trust until we are categorically convinced that consumers are going to be able to travel.
Okay.
Does that include airlines?
Yeah.
So you can't book Ryanair, you can't book EasyJet. You're saying basically you can't book.
If our member wants to go online and book a flight, they're able to do so, but we certainly won't be releasing those funds from trust until we know that flight's going to be taking place.
So therefore the member can't do it then?
Possibly not. But then that's the best advice to give them, because we're here to secure the consumers, but fundamentally we're also here to protect the members as well, and not allow them to be exposed from paying for product that they're not actually going to receive, and having to refund customers on funds that they may have on credit note or are unlikely to see because potential failures.
Alan, just coming back to you quickly. When you talked us through the potential final protection models that are available, or the ways in which they are administered. Is there any guidance you can give on in terms of when companies perhaps look at this during this process? Is there any way of working out kind of what should be the right approach for your business?
Well, I mean, clearly, if you need a lot of cash flow, a trust account can be a real issue. The obvious people to look at are travel counsellors, who are one of the first, if not the first, to operate. And they actually operate a trust account that doesn't allow any money to leave. And so they negotiated with all their suppliers before they started and actually said to them, this is what we're going to do. Your money will be protected, but we're not going to pay you a penny until the customers have actually travelled. Now that system works, but it only works if A, you've got an awful lot of money to start up with, because you're going to have to fund it all yourself effectively. And B, you're not relying on cash flow. Now, the reality, of course, is that most businesses, whether they're travel agents or tour operators, have in the past relied on cash flow. And the minute you cut that, potentially for a lot of businesses, it's the end of the business. I mean, I would hope in the last 5-10 years, people have moved away from that situation. But it's clear that an awful lot of them are still very dependent. And bonding and insurance, of course, means that the cash is there for you to use as you want. The problem, as we've seen now, is that when you use it to pay for suppliers, they then don't deliver the goods and they won't refund. A lot of my clients operate in Africa, where the suppliers expect payment 3 months in advance. And despite the fact that the lodges are closed and they've been paid in full, they're not prepared to offer a penny back. And yet the end supplier to the customer, the tour operator, is expected to refund in 14 days. And there are huge issues here. And I think there's going to have to be a realignment of the relationship between suppliers and operators going forward, because without that, this business isn't going to survive, because this isn't a short-term problem. We may get traveling again in September, we may not, but this isn't going to be a once-off event. Everybody seems to take the view now that this is going to be here at least until everybody is vaccinated, and that's going to take years. So this problem, we may get over the first initial hurdle, but there's going to be more. And I think we've got to have a really careful look at where we're going in the future.
Steve, just reflecting on what Alan just said then as well, is when we kind of look to the future as well, and how we may well emerge from this, whenever it may well be. Do you feel there is adequate choice out there in terms of options available to businesses to manage this problem? And also, will we have to look at that relationship around how refunds are currently worked out at this moment in time?
Okay, so a couple of things. We've got to push as an industry very hard to bring the airlines into the fold. In the longer term, they have to move to a trust fund model so that the cash is there for repayment. We're not going to get that initially. Let's just be asking somebody to lock the gates of Fort Knox after Trump's stolen all the gold. Not that he has, not accusing him of, but basically that's the sort of situation we're in. The airlines and money, trust funds at this stage. And we need healthy airlines. So whatever we say about airlines, we need them, and we've got to support what they have to do, because airlines, we don't actually. However, they should come into the bonding regime. It is ludicrous that somebody can go on Google, book an airline via Skype, book accommodation via booking.com. That holiday doesn't have to be bonded, but if it's booked by an agent, it does. And not only did it have to be bonded, with a human shield in front of the CAA, because if anything goes wrong, they have to replace the element that's gone wrong. So basically, agents are being punished and punished and punished. So it's going to give them two choices going forward. Only sell bonded holidays as an agency basis from the likes of Jet2 or other tour operators, outside accommodation and tell the agent or customer to book their own flight, or do a hybrid where they book the customer's flight with a consumer card. Now, Alan will tell me that's legal, and I will tell him, if Google can get away with it, why can't a travel agent? The last thing I'd advise on travel agents is make sure any money you're paying as much as you can. Also, you should be buying flights from EasyJet, Ryanair, etc., on virtual cards that have a recharge mechanism in place. You're back into your trust account, and on top of that, you should be taking supplier failure insurance or some sort of disruptive insurance that gives you your commission, allows you to rebook a holiday if the airline goes bust. The big problem is nobody's going to give you delayed payment insurance. The insurance market is simply not that relationship with you and the airline. So the only way to force repayment is a recharge on your virtual card. So basically, moving forward, you've really got to work with and how you protect yourself, because trust funds alone will not protect you. Sorry, guys.
Alan, just picking up on that, you've referenced this a number of times, I think even in our previous Business Support Live sessions, the issue of chargebacks at the moment. Have we got past the point where we consider that to be a significant risk, or is there another potential for this to come up again?
No, I think chargebacks, I fear, are going to be the big issue in the next month or so. The likes of which the consumer press are now telling people, if you can't get money back and you're not prepared to wait for a refund credit note, this is the way forward. Now, both Visa and MasterCard issued guidance to their own members at the end of March. It's not terribly helpful, I have to say, because the guidance is the consumer should negotiate with the supplier, the travel agent or tour operator. But if they are not happy with what they're being offered, and what they're not being offered is a refund, then they can make an application. Certainly, I'm telling my clients to defend them on the basis of a good explanation of what is going on. But I think the chargeback issue potentially is what's going to push some people out of business. And we saw in the north of England, I think at the beginning of the week, a coach operator who at the beginning of March saw there was a problem and agreed to offer everybody refunds before they asked for them, not realizing that this was going to be a 6-month problem rather than a 6-week problem. And he's gone out of business. And we see this morning another coach company talking about clear problems they have with finance at the moment. Chargebacks potentially will be what finish people off.
Okay. Daniel, just returning to you quickly. Oh, were you going to come in then?
I was just going to say, I think looking at what financial models are out there at the moment and how to make a decision, I would say that it's really important for companies to look 5 years ahead. And having said that, I do understand that people are in survival mode at the moment and looking just to keep their businesses going. I mean, COVID-19 has hit the travel industry in a way that nothing else has. What I would say is that separating client funds from cash flow would allow you to really understand how profitability is going to work within your business going forward, and would allow you to make the best decisions for you today on cost and sale value. So I would say that when you are looking to choose, don't just look in the short term, try and think 5 years ahead, try and think what's best for the business. How am I best going to secure consumers and get confidence with the consumers they book with us? And how am I best going to protect the business and myself from outside influences? So I would say really try and make those difficult decisions today, although I do appreciate people are in survival mode, and it may not be always at the forefront of their mind.
I just wanted to pick up on a point you made there as well, Daniel, actually, is talking about the scale of this challenge. I mean, we've talked in the last, I feel like we've heard in the last few weeks or so, comparisons to some of the other crises we've had in the last sort of 20 years or so, whether that's 9/11, whether it's ash cloud and things like that. Steve, is this just beyond anything we've ever come across before?
Absolutely. So Alan's probably been in the industry longer than me, but I'm old as well, and never seen it. I've seen the Gulf crisis, seen ash cloud. At no point we've ever seen where the entire flying program is shut, every single country border is shut, and there's no quick prospect of how they open. So one of my fears is I see domestic tourism starting again this summer. Can see that happening. But the decision to open a border is a political decision. And if you open your borders and you allow somebody in who infects one person in your country who then dies, you have a political issue. And therefore, it's a lot easier to say no than it is to say yes. So I think what will drive it will be those countries that have a high GDP related to travel, i.e. Spain, Greece, potentially Turkey, will open their borders because the economic damage of keeping them shut is so great that they need tourism to come together again. But then we've got to face the issues of consumer confidence, not only do I give my money to a travel agent who's given me a credit refund? That's the least of the problems. Is, are we going to get them on aircraft wearing masks? Are we going to get them to queue up to be tested? Are we going to get them to adopt the Chinese style program where on your phone, if you're green, you can travel because you've been tested and you've had the disease? If you're amber, you haven't had the disease, you're at risk. And if you're red, go home, you can't go anywhere. That's what the more advanced countries that have had COVID and coming out of it are doing. Until that's in place, I can't see countries open up borders without the certainty of the people arriving are not infected. And if they do allow people in, they probably are going to quarantine for 14 days. Unless you'd like the ultra inclusive where you can't go anywhere apart from live with 40 British people for 14 days holiday. So therefore, I think we're not going to come out of this in terms of beach travel until at least September, which will cause an ultra late market. And it'll also take summer-only destinations out of the market because aircraft, if you start at the beginning of the season, a bit technical, 26 rotations, you have the empty leg of flying it out empty or flying it back empty and flying it out the end over 26 weekends. If you've got it at the end of August to the end of October, you're not starting as an airline. It's just too expensive. So therefore, we're not going to have a strong late summer market for most destinations. We're probably going to have an ultra early market where all those people using the refund notes book early for 21. Airlines will put their programs on early for 21. But the biggest problem is if you've got a trust fund, you're taking the money now, you can't take your commission. You've got your overheads and you're in the meantime. So ultra early markets are not the great way for our industry to start up. Logically, you then go back and say, what's the cheapest person to advertise? Great, our loyal customers. No, we've just pissed them off by giving them credit notes. Sorry for my language. And therefore, how do we get them to use more money to book again? It's a really complex, it's going to be really tough. And any company coming out of this the same size as they went in is going to fail. You have to be smaller, leaner, tougher, meaner, and also probably adopt a startup mentality. Cash is king. And how do I get this business off the ground at the lowest possible cost?
Thanks, Steve. And Alan, just picking up on that briefly, in terms of looking ahead to later this year, so into the summer, then perhaps into the winter season as well. I mean, surely there is going to come a point at some stage where there is a cutoff where summer is just not going to be viable. Is that fair to say?
Yes, I think it is. And I think the more we hear from the likes of Chris Whitty, the Chief Medical Officer, that we're looking at some sort of social separation to the end of the year, I think the realistic issue is, will customers want to travel? Never mind, can they travel? I mean, EasyJet came out and said, oh, they would leave the middle seats empty. So you would only be 18 inches away from the person next to you rather than 1 inch. That isn't social separation. Well, it's not 2 meters. If you were to do it properly, you would have one customer at the window seat on the left-hand side and one customer in the window seat on the right-hand side, and nobody in the row front or behind you. So that means 18 seats, you get 2 passengers. That isn't viable as an operation, unless people want to pay £1,000 for a one-way ticket to Alicante, and I don't really think that's going to be a viable option. So I think we're going to have to move a lot further with seeing effective controls of the virus before a lot of people will want to get on a plane again.
Daniel, picking up on a point around the situation with refunds at the moment, in terms of the way in which PTS operates and how it works for customers, would any changes to the package travel regulations make a significant difference to how you operate? Would that give your members relief?
The package travel regulations weren't really designed for a total lockdown. And I understand the need for credit notes in this particular market. It's really challenging because, I mean, we're obviously running a trust account. We're doing an awful lot of refunds to customers because we're holding on to those funds in trust. And like Steve said, earlier, you're not getting the profit early, but equally you can refund customers rather than having to deal with reputational risk and having to deal with the fact that you can't contact those customers when we come out the other end. The other thing I would just do want to say is that I think there's an awful lot of talk about when we're going to come out of this situation. we've never seen a crisis which has completely locked the travel industry down as it has, with an indefined length of time before we come out the other end. And how are people going to travel? Are they going to want to travel? Will people be able to get travel insurance who have maybe got medical conditions and that will stop them from traveling? Will people be able to afford to travel to the level that we've seen them do in the past? I think refunds are important. I think we need to be refunding customers wherever we can and keeping consumer confidence. I think we've got to certainly be concerned about how we're being viewed by consumers after we come out the other end, and how they're going to book with travel agents again, or why don't we just book direct with an airline, because at least I'm covered under my card and I know I get my money back. And I think there may be some movement on the package travel regulations, but we need to be very cautious. We don't sort of score a home goal here, get an extension on credit notes, lose consumer confidence, and our branding and recognition goes, and people just stop booking with us. So I think we've got to be very cautious and tread carefully in our approach.
Yeah. Have you got any thoughts on that, Steve, in particular on that point of the caution we need to take at this time?
Yeah, I think basically we must build back trust. We must have trust funds, so we can say to the customers, your money is 100% secure and you'll get your cash back. Moving forward, when we rebound, that's a fundamental. You can't do that. I can't see customers giving you the money. So we can do that because we can get different types of insurance. Now we know that it may be a delay insurance. If you're getting the money back from the airline, we should be able to insure that. So we've got to change our model. We've got to put pressure on the airlines to actually make sure they guarantee before we pay them, they will give our money back if they can't deliver the product. Yeah. And then I think we can go out there, but we probably have to change the payment terms again to the customer to say, pay a low deposit and then pay 2 weeks before the balance when you know that you're actually going to be able to go on holiday. If I was a customer, I'd say, okay, I get that. I'll buy into that. But then look at which customers are going to travel. It's going to change demographics because we know young people are more, not immune, they're more healthy and are less likely to be worried about COVID. So they will travel. Older people going on cruises, they're not going to travel. The middle people, we don't know yet. The families, we don't know yet, but they could travel. So I think we've got to segment our offering. We've got to look at how we get to those customers on the lowest cost basis and how we reduce our overhead. So for me, the winners are home workers because they don't have a shop to pay for. They don't have advertising on Google to pay for, and they can create a community using Zoom and sell to the local community. So I see more people moving into that model, out of shops. I see less people going to the online players because how do you build trust when you're an online player? And the advertising on Google isn't be just as horrendous when we start again as it was before. So unless you've got a major brand online that's going to give you free traffic, and I think On the Beach have that, I think Love Holidays have that, I think Tanatex may have that. Outside of that, very few people do. So I think we're going to see a shift in how travel is sold, who it's sold to, and particularly what destinations, because it's going to be a destination you think is safe that you'll go to. Now, how long that destination will be safe for, we don't know. So that changes the airline model. So for example, say Spain opened up and Mallorca opened up. It'd be more logical for the airline to place the aircraft based out of Spain, flying to Gatwick, flying to Manchester, flying to Glasgow, in case any of those cities got closed down, or flying to Germany, in case the UK got closed down, or flying to Scandinavia, in case one of those got closed down. So the whole industry has got to rethink some of the fundamentals about how traditionally we've worked and reshape it for a disruptive, flexible market where COVID is going to be here for a while, and you've got to be faster than you think.
Thanks for that, Steve. And I just wanted to pick up on the refunds point again, just from the perspective of the fact that in the absence, as we've discussed before, the absence of government guidance on this and any movement to assist the CAA with this as well, ABTA has obviously taken a firm stance, and it's really put itself forward as the de facto kind of leader on this, on the refund credit note situation. Now, the issue comes is that we're still awaiting that possible guidance or changes to the law from the government. But if that doesn't come, Alan, is there going to be any risk that this just all collapses in on itself?
Well, the good news at the moment is that certainly talking to my clients, about 70 to 75% of customers are prepared to rebook. And therefore, what we're talking about is the remaining 25% who say, no, I want cash and I want it now. And of course, we've just gone through Easter where there are about 2 million bookings, which means there's 500,000 people out there who are expecting a refund. Now, some may be prepared to take a reasonable view, but there are, I think, a substantial number who say, well, no, I've discovered now that I'm entitled to a refund in 14 days. And it's not really my concern that you can't get the money from your suppliers. You've had my money, I want it back. The problem, of course, is that some of those refunds are going to be demanded from travel agents who pass the money on to customers, to tour operators, and therefore can't get it back from the tour operator, who can't get it back from the supplier. And I think the refund credit note has also created another problem, which probably wasn't thought about, which is a lot of people are about to pay or due to pay their final balance for summer holidays. And they're taking the view, I'm not going to pay cash now if I'm only going to get a piece of paper back in 3 months' time when my holiday doesn't go ahead. And I would say 50% of the calls I get are on the question, should I pay my final balance? And, you know, what do you say to people? I mean, I'm doing radio interviews quite often, and it's a very difficult answer to give, because the reality is if you pay cash, you're not going to get cash back from 90% of the operators. So I think we have a real problem here. It would be very helpful if the CAA would actually say, yes, we can confirm that these notes are protected. I mean, their own guidance notes to the use of the Air Travel Trust would suggest that the money is protected. But you can't really tell people to go and look at clause 4.2 of the guidance notes of the Air Travel Trust. It's just not like that. What you need is a statement in black and white in 2 lines saying, don't worry, this money is protected. And it really wouldn't be very difficult for them to do that. I don't honestly expect any change to the package travel regulations. I just don't think they're going to do it. And of course, they've been emphasizing that lots of other countries have changed the rules. I was looking yesterday at the Spanish rules, and the Spanish have exactly the same 14-day rule for refunds. And they've agreed that operators can issue vouchers, but they've got a time limit of 60 days. And that really isn't very far ahead. And on the 60th day, they have to change it into a refund. And I think one of the issues, of course, was that ABTA first said the refund credit note should be dated 31st of July. And if you haven't booked or decided to do something else, you can have a refund then. And of course, then they said, we're never going to get holidays moving then. There isn't going to be any cash flow. And so they started saying, look at what your bonding date is and move it to that. And that, of course, from a consumer point of view, kind of looks as if you're changing the rules as you're going along. But yeah, I mean, I can fully understand why they did it, but they should have thought about that, I suspect, earlier. And I think changing the rules as the game had begun just doesn't work from a consumer perspective.
James, can I jump in on that point? Because I think there's a couple of practical things that we could do quite quickly. Jet2 have their program on sale for summer 21. Can EasyJet and Ryanair please put their programs on sale so we've got more chance to say to customers, you can't have your holiday this July, let's move it to next July or next school holiday. That's really vital in trying to keep the trust in the credit notes and allowing people to rebook. At the moment, you're giving people a piece of paper and telling them they can't change next summer, which is not great in the first place. So I think a practical bit of advice there. The other thing I'd advise people is, remember quite often that a big OTA or a big consortia may have sold 150 different hotels to a destination, but those holidays are cancelled. So go and contract 8 hotels, 10 hotels, that you get payment terms that you know you can move if anything happens again. Yeah, and then rebook people into a much more smaller range of product so you have control. Because the traditional model of selling every flight and every hotel leaves you so exposed. Don't fall into the same trap as we come out of the first wave of COVID, because unlike Alan, this isn't going to end here. So please rebook all those people you have into a much more controllable set of products where you can say to them, I will get your money back if this hotel has to shut. I will move your location if I can't go to Mallorca. Don't fall into the same trap that we're in at the moment where it's so scattered, it's uncontrollable. So airlines on sale, concentrate your product.
One thing I would say is if you are going to give out credit notes to people, don't use those funds held as working capital of the business. you need to separate them in some way. I mean, what
Yeah.
you want to find yourself in a position is that you're giving a 12-month window of a credit note, and at the end of the 12 months, just when travel's starting again, you're having to pay out huge sums of money from new customers' income onto old customers' travel, and you actually increase the debt within the business to a point where it may not survive anyway, and all you're doing is letting even more people down. So I think you've got to be very careful if you do issue a credit note, that you look for government support in a loan to fund the business, and you separate customer money. So when you do start traveling again, you can start operating correctly and providing the products to which the consumers have paid for.
Thank you, Daniel. I want to bring things to a close now, but just with a final point, really. And I'm not looking for a solution here. I should stress this immediately, but I just would like to get a thought from all of you, if possible, on what you feel is the future. Maybe if we're looking more than just a year or 2 years ahead, where do we go with financial protection in travel? Who would like to go first on that?
I'll have a go. I think we have to change the relationship we have with suppliers. I think suppliers have got to grow up and realize that we can't pay in advance because the consumer isn't going to pay in advance. I think, as Steve has said, I think consumers are going to look to pay at the last minute. And we certainly can't afford the payout before we get paid ourselves. I think one of the big problems is that Thomas Cook's failure last year indicated that they hadn't paid hotels for 3 months. And the assumption from all consumers is that every tour operator doesn't pay until the holiday's over. And that's a big problem. That's being thrown at a lot of my clients at the moment. I think we have to change the relationship we have both with hotels and more particularly with IATA and the airlines. IATA gets away with murder, and there's no other word for it. They are potentially going to be the biggest problem we have.
I think the landscape's changed so much in the last 6 weeks. Going forward, what I would say is having a trust account where you can say to consumers, look, your funds are protected, they're held in trust, and you're going to get your product. And also being able to say to suppliers, the funds are held in trust and we're not using it as working capital and you will get paid, will allow you to actually potentially pay the suppliers after the event, and to give you more as a business owner flexibility and control over your business, and not be at the behest of suppliers who are forcing you into unrealistic payment terms, and consumers that are going to come out the other end here and say, well, actually, I booked a holiday last year and I got a credit note, or the company didn't actually provide me with the goods at all, and getting the credit note took me months. So I think having a strong consumer-backed product to protect consumers, to protect the suppliers, and to protect the business itself, so they can be profitable, is going to be key.
And Steve, over to you. Let's round out with what you've got to say.
Okay, in the words of Martin Luther King, I have a dream. It's probably a very unrealistic dream, but I would take on David Speakman's original idea of a travel bank, where basically all consumer monies go into a central trust fund and all suppliers are paid from that trust fund on delivery of the product. I think hoteliers are quite easy because most hoteliers have been used to being paid after the event. Private accommodation owners are used to getting at least a third before that would happen. The problem is our lovely airline friends who have based their entire model on getting the cash on booking. If that continues, it doesn't matter what trust funds the rest of us put in place, we're still exposed to a logjam of airlines not paying the money back. So we need to have a fundamental change in regulations. It says all through the chain. If that doesn't happen, there's no point in anything else, because although I'm a great believer in trust funds and travel agents, if you can't get the money back from the airlines and you're forced to use Ryanair and EasyJet and British Airways because there is no other choice, without those you can't sell holidays, you can't get the money back from their funds on an agency basis, do not work. All they do is make sure you don't use the working capital, which should be a fundamental thing anyway. Any business should not be using consumer cash to run their business. It will be a long-term disaster. So travel bank, please, unrealistic dream, probably get shot like Martin Luther King.
Thank you very much for that, Steve. And thank you very much to my panelists, Alan Bowen, Daniel Landen, Steve Endacott. That's been a very, very enlightening debate on where we are at the moment. And hopefully we'll be able to catch up soon and have a slightly more positive picture to paint. But until then, thank you very much for your time. And thank you for joining us on the latest Business Support Live. Thank you very much.
Hey, guys.
Bye.
Bye.